yesterday and today, you tagged this high, and that's high for the move, and we're holding trade up there.
Hi, once again, everybody. Welcome back to the Comstock channel. Love talking with you about all things ag related and ag markets. Today, we're going to be talking about the way we finished the week. Make sure you like these videos, subscribe to the videos when you click on that bell icon down below, and share them with others as well. Today, I call on, Eric Relph. He is with Comstock Investments. And Eric, we're going to summarize the way we finished in the week. And if you look just at the grain side, you would think, wow, what a disaster heading into the weekend. That was a lot of pressure, and it was led by the wheat. What in the heck happened on the wheat market?
Well, it was getting pretty widely broadcasted that Russia was direct negotiating with at least 13 different countries that were not including any outside bids. So no foreign country involvement, just Russia working directly with these 13, at least that we know of, countries to sell wheat. So they're going to fire sale it when that's the case. They're going to offer so much under whatever the FOB is elsewhere, and they're going to do business with whoever will do business with them. And sounds like there's 13 of them.
Well, and of course, I guess kind of keeping up with the move in the wheat, we had soybeans taking a kind of a beating here on a Friday. I don't know if that's exactly what people were hoping to see heading into the weekend there. There are times during the week it looked like they were coming back.
Yeah, and actually this morning I thought, hey, we might be able to put something together here. But I cautioned in our premium morning video that we needed to stave off the commercial hedge pressure later in the day, because that could kind of change, and that would dictate how we finish the week. And we're in the gut shot harvest here, and they're doing a lot of purchasing over a given weekend right now, and they're hedging off that risk, and they have to do it on Friday before the close. So here you see late session weakness.
November had, I believe, a 26-cent trading range. Mm-hmm. Almost seems like a weather market when you talk about a move like that.
Yeah, well, and to an extent, there is a weather market taking place as well. It's just Brazil's weather, and sometimes that gets lost on people, and we've talked about it several times on here, and that's still the case. You know, they've started getting this perfect mix of wet and dry now. And that's exactly what they want to start the season. It gives them moisture to plant in, but opportunity to plant. And as long as they keep that going here for the next few weeks, they're going to make some massive progress before the monsoon season actually starts setting in certain states, and obviously eventually migrating through the whole country.
Now, Friday was a little bit unusual because we got a delayed weekly export sales report, because we had the official Columbus Day holiday on Monday.
Yeah.
So when those numbers came out, the weekly numbers, I think a lot of folks were really surprised at how good the numbers were. And then we had, for a cherry on top, some overnight sales too, right?
Yeah, we had the weekly sales were really good. I mean, we can take a look at those right quick. And
okay,
we had 500,000 tons of wheat, which that's been kind of the upper end of a recent ranges that we've seen in the week. So another 500,000 ton week that was up 16% for the week and 57% from the 4-week average, because the last couple have been really low. But 2.2 million tons of corn there on that next bullet point, up 82% from the last week. And they just say up noticeably from the 4-week average. And so 82% week over week gain is pretty impressive. And you had just soybeans, 1.7 million, up 35% from the previous week. Meal, 251,000 tons, oil, 400 tons. That was actually very light, but they don't do the comparisons in the oil like they do in the other grains. But then we saw another 20,000 tons of oil sold to Mexico on a daily flash sale, in addition to Mexico buying another 200, and I'll probably get the number wrong, but 230 some thousand tons of corn, and another big sale to unknown destination on the beans. It was a big export day, and the grains were the primary beneficiary, but you wouldn't know it when we reopened the day session.
Yeah, right. And of course, the markets didn't act that way when they closed. It's like all that good news fell by the wayside. That reminds me of about a year ago when you had the markets would always trade opposite to whatever the export news was.
Yeah.
Don't know if that means anything right now or not. What do you take away from that?
Well, a couple of takeaways. One, a market can't rally on bullish news, and you would think export sales would be bullish news, but I think there's so much trader fear of cancellation now. So especially on the part of China, when you see these big purchases, oh well, they'll just cancel it down the road, and that's kind of the attitude of a lot of people. You have to take it at face value initially, and then kind of determine what things are going to look like moving forward. If Brazil's production is extremely cooperative, and they're going to make the kind of crop that CONAB is currently expecting them to make down there, then you can expect that some soybean sales will get canceled as we move into next year. But for now, this is the data we have, and this is what we have to work from. The other thing that I keep thinking about with regards to the market not reacting to these sales is we're not seeing the big soybean sales that we would like to see. You'd like to see multi-million ton sales of soybeans this time of year, especially to China. We're not seeing those kind of numbers. If we continue to see these 1, 2, 300,000 ton sales, that's probably going to continue to disappoint the trade without any big bulk sales. So I think that's factoring.
So what do you think is causing the big appetite by Mexico of U.S. grain products?
I think it's multifaceted. One, I think we're cheap. Our corn is sustaining as lower prices as we've sustained for the year. We made lower lows in August, but we didn't really sustain trade down much below $4. So just like farmers, if they miss a sale at $4.50 and now we're back at $4, well, we get back up to $4.30, $4.40, we're going to make some sales. They're on the other end of that spectrum. We didn't do the buying we should have when we were at $4 last time. We get back anywhere close to $4, we need to be locking up some supply. So I think that's part of it. One is just price oriented, and that's the bulk of any import purchases from any country around the world, with the exception of Japan. It's just who's the cheapest. That's the primary factor. Secondary factor might be what does Mexico anticipate happening next month with regards to the election. And really, we've heard enough tariff talk from both sides of the party line that you can't be too optimistic if you're Mexico moving forward.
When I see the drop in the wheat, that makes me think that maybe things are looking better. Like, for example, on the drought monitor, did they wipe out the drought areas in the plains? Or is there a change in perception of the new crop? What happened there?
Well, that's something that I usually touch on in my morning premium videos, and I failed to do that this week, and there just wasn't a ton of change. So we can put it up here and just kind of take a peek. But basically what I see that really stands out is it's gotten a little worse in Iowa. Of course, that stands out to me because I live in Iowa, so that's where I'm looking first. But then when I look at Kansas,
to point out, the newest map, this week's map is on the left, right?
Oh, sorry. Yes. This week is on the left. Yep. And you can see there's just not a lot of change, Northern Illinois is a little bit worse. Iowa's a little bit worse. Wisconsin is maybe notably worse. But there's just not a ton of change that would dictate much difference as far as wheat country. But the forecast is changing. And so I'm anxious to see what this looks like next week, because we should get some reprieve from even the Nebraska-South Dakota border all the way down to southern Kansas. And some of these red areas in Oklahoma, they've actually got some chances for a shot of rain as well. So next week will be the one that tells the tale, I think.
So what's the situation in Europe and in Russia then when it comes to their wheat land?
They've got problems, and Australia does too. The only major wheat growing country from our perspective really is so the EU, the Black Sea, Russia and Ukraine in the Black Sea, several countries in the EU, but primarily France, Germany. They're the big ones. And then the others do their share, right? And then you go to Australia, and then you go to Argentina. Argentina is probably the only one that's really not having the trouble that the rest of the world is having right now, including the U.S., with current conditions regarding wheat. Black Sea and EU are probably the worst of everybody right now. And those supply concerns just don't seem to be moving the needle when Russia just continues to shovel it out the door.
Well, and that is kind of weird when you have the forecast the way it is there, and you had a weaker U.S. dollar on Friday too. Usually that helps the wheat market out. Didn't do it this time.
It didn't help anything other than gold and silver today. You saw the cattle market made a move, but that was other influences that really did that. But yeah, the dollar, I just don't think we're going to see the dollar have much impact on anything until we can get closer to par. It is probably attracting some selling here. I know I sold the dollar December dollar index futures today for several people. And so it's something that's starting to draw attention as it starts to weaken here at the highest levels that we've been at in weeks. So maybe we get some kind of a meaningful setback that might actually entice some outside business.
Now, from what I know in the past, every time the dollar got stronger, that made our soybeans less competitive against Brazil, and then we always lost business.
So they're just not in the business right now. Brazil is not. And so right now it's all about sustainability until Brazil's next crop. So if China perceives that they're going to be okay treading water and getting by until then they will. And so far, that's what they've done. That's why we haven't seen the bulk purchases that we referred to earlier. But eventually, I think that comes to a head, and they've got to be making some kind of purchases beyond what we're seeing right now, which is just the routine business, unless they're sitting on stocks that isn't known by the rest of the world. And, China's maybe not always been the most forthright when it comes to giving data about their situation domestically.
We were talking before we started the recording about the move in precious metals. And boy, that was a sizable move. A lot of folks were pointing to the big move in the gold market here to wrap up the week. But you and I were talking before we hit the record button here about the silver, just really overshadowed the move in gold. What's going on with that?
Yeah, I mean, per contract, you've got a $2,700 move in gold, and you've got $9,000 move in silver. It's just incredible. And silver had a topside breakout today, so there's probably some attracted technical buying in that regard. But anytime the dollar's down, which, you had the dollar down 30 some points, the metals are usually a winner unless the stock market's taking all the money. So you got three major money flow areas there, and the stock market was higher, the metals were sharply higher, and the dollar was just off a normal trading day. It wasn't like it was just getting pummeled today. And so it was a little interesting to see that cash flow coming back into both the equity and the metals futures. And I'm thinking throughout the day as I'm looking at quotes and stuff, I'm thinking, there's just a ton of sideline cash that's got to be looking for some place to be parked here. And I can't imagine that they're going to continue parking it in the stock market when we have such concerns about what goes on a month from now.
It would seem to indicate a lot of fear about the future of the economy when you have precious metals taking off like that.
Yeah. And, my daughter dabbles around with investing, and she's asking me what stock specifically, what stock should I be looking at? And I said, well, what do you have it parked in right now? And she said, gold. I said, just do automatic buy-ups in gold. Just stay in the gold. It's fine. And I think that kind of took her back a little bit, because normally I'll have some kind of input. And I said, with an election coming up and sitting at all-time highs, we just made our 34th all-time high for the year 2024. I said, I wouldn't be too excited about stocks right now, especially with the election next month. And I think that's going to be the attitude of a lot of people. So what are the safe havens? Precious metals is always a big winner there. Unfortunately, the dollar is too, but that's being dictated more by the Fed right now. So we'll see what that shapes up like.
Okay, you alluded to it a little bit ago, but there was a move in livestock on Friday that kind of countered the move that we saw on Thursday. That was interesting. What caused that turnaround?
I think it was lower grain. It was higher stock futures, but I'm going to pull this up just because I was just looking at this before we got on here. Forget about these retracement levels. They're for shorter term charts. But what I wanted to point out here is this is a monthly continuation chart for live cattle. So this is front month going all the way back. Let's see, your view here that's the COVID low right there. So that was spring of 2020 right here, when we made the COVID low, and then we've just been rallying out ever since. And this is the third highest month of cattle trade that we have ever seen in history. And those 3 months have been this month. The highest was in June, and the second highest was in March. So we are at very lofty levels, and I had to keep you waiting before we recorded because I was talking to a client about different ways of protecting cattle, because there's just so many dollars at risk here. And so could we go and make a new high? Yeah. But we are currently on front month. Right now, we are within $8 of the previous high. And so it seems to me we're a lot closer to what could be a top than what would be a bottom for sure. And probably a ton more downside risk than topside risk from here. at least currently.
It seems like if you look at the risk reward ratio right there, it looks pretty lopsided right now. Surely there is a way that you can fairly simply put a floor under where you are right now to protect everything from falling apart.
There's several ways. I mean, as simple as selling futures or buying a put option, or we do a lot of option strategy work with clients, and we also do a lot of LRP, livestock risk protection. It's deferred payment, defined risk. It's much like a put option, but the government kicks in some of the bill. There's a lot of ways we can go at it, and there's advantages and disadvantages to anything. And so that's just conversations that need to be had with one of us here. It doesn't necessarily have to be me, but give us a call, talk to us, and if you're already a client, talk to your specific broker, and everybody understands how all this works. So yeah.
So refresh our memory. Does LRP usually work better when the market is going up or when it's going down?
Down for sure. Yeah. So if you can lock up any kind of floor, and I say work better, define work better, right? Obviously, if I can spend $10 on LRP and the market goes up 60, I'd much rather it not work, and I'd much rather the market go higher. But as far as getting a return on your premium, the LRP is going to give you payouts in a down market. Right now, next summer I can set floors in the low 250s, which generally pencils for most for feeder cattle. So I would suspect, and I won't see the quotes until after 4:30 p.m., but I would suspect today we'll have something like a 252.5 floor that we can lock up for the summer months in feeder cattle, and close to 190 April live cattle. I know we've got a lot of people that are going to be taking advantage of that for some of the feeders they've got right now that they've just been buying. So some of these green grass yearlings coming off, and they're getting ready to they're either starting to feed them or getting ready to, and so that should line up pretty good, and they can take advantage of that 190 April, and that lines up with about the highest sustained trade we've ever had in fed cattle. So
Well, and I know that you have been fielding a lot of calls in that regard this year, and our whole Comstock team has really been talking about that a lot. So just something to keep aware of, and that is a very useful tool to anybody that's in that livestock industry.
yeah,
So cattle had a higher close on Friday. How about hogs? How are they hanging in there?
actually really well. The hogs continue to impress me from a technical standpoint. Now we're not seeing the fundamental follow through that we'd like to see, like on the cash side. And cutout's been okay. Nothing to write home about, but it's been fine. But today was another day where you had pretty poor fundamental inputs as far as the cash market and volumes and everything else. But the futures just stack on a little bit more gains. So I'll get to the daily chart here, and we're sitting here yesterday and today. You tagged this high, and that's high for the move, and we're holding trade up there. So this has been really impressive, and that's the December contract. Look out at some of the important summer month contracts, and here's June, for example, similar deal. You're right up at the high for the move, and everything looks really nice. But again, without cash market following, I don't know that these are sustainable things that we can bank on moving forward. And so we're definitely taking advantage of these price levels and getting some hedging done. We do LRP on swine as well. And also, of course, our normal brokerage work through options and futures.
Now, percentage wise, when you look at the carcass values between the pork and the beef, are they keeping fairly even, or is one gaining on the other?
Really pretty even. The pork cutout kind of took off a little early, but then so box beef prices were struggling a little bit, and we were kind of thinking, okay, maybe this is where we start to see some equalizing, and the cutout values run up and the boxes kind of stay steady. But at that time, I mean, choice cuts were struggling to get above 300, and now we've got choice back up to 320, and the pork cutout has just continued to kind of steady climb while the boxes have gotten explosive. So on a given day, it may fluctuate, but all in all, they're staying pretty consistent.
Well, Eric, excellent information as always. I appreciate you joining us. And again, I want to encourage everybody to check out Eric's morning comments. We have a morning report, and he does a morning video each and every day. Really cool. I got to see one a couple days ago that was very enlightening, and it was stuff that I hadn't heard before either. So anyway, he has some really groundbreaking information in the morning. So you might want to check that out. That's on the premium content for the morning commentary. And again, you can get that for a month for just $1. Check it out. Well, that'll do it for this episode. Thanks for checking us out. I appreciate that. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.